This is Eric Mwatha with Mwatha.com. In this video, as we continue studying the RSI, we're going to take a look at two examples. This time we're going to be studying the monthly and the hourly charts. Again, we're right now concentrating as far as the RSI's behavior when it moves above the 50 level and also when it moves below the 50 level, so we can understand why we get big moves in the market or in a stock that is moving above that threshold. Now we are going to go way back and look at the monthly charts all the way back, and we are taking a look at the Dow Jones monthly chart between 1983 and 1980. And of course what we are focusing on here is what happened there when we moved below 50. You see that there was a big move in price there. And there was a recovery back above 50 a couple months later, and you see this big massive monthly gain on the Dow Transports. That is consistent with what we understand is the mathematical aspect of the RSI. So now let's move on a couple of years down the road and we go back now to the Dow Jones monthly. But before I do that, why don't we take a look at, just as a side note, the price did move out of this falling wedge type pattern here. Again, as a side note, we're just observing that. And also notice that the RSI did move above this top lines here. So the RSI also did confirm a breakout. So not only did it move above 50 here, it also moved above this RSI top lines and also above this price channel. Again, just a side note, because all these are educational videos, and if we see something that we can use to further understand how the market works, this is a nice way to do it. So let's move forward, and what you notice now is after that move here in the early 80s where the market defended the 50 level there, you see we had a big spike in the Dow. Further down the road in 1984 we had another big down month here, which again corresponds with a move below 50. We had again the market defended the 50 level on the monthly chart, which was bullish at the time, moving back above 50, and you see a big spike there and a recovery in the market. So again, moving above 50 launched another rally, which took the market all the way to the highs of 1987, and that's where we come across this crash area here in the market, 1987. And as you can see, that corresponds with moving below 50 on the monthly chart. So everything is just confirming our lesson here that the monthly, the dailies, the weekly, the hourlies always move or stage big movements whenever you have that drop below or above 50 on a chart, whatever time frame you're looking at. So now, years down the road, we're going to move from the 80s. So now we're going to move forward into the 2012 time frame, after what has been known commonly as the digital age or the information revolution age between the 80s and the 2000s. And so we are looking at, fast forward to the Dow Transports hourly chart. And for this example, I'm using the 26 period or 26 bar RSI formation. But what I'm trying to tell you here is, irrespective of the time or irrespective of the charts, you see the same phenomena. As you can see here on this hourly chart, you got a big drop here in price, which corresponds with a big RSI swing from above 50 to below 50. You have this massive gain in price here on the hourly chart there, which again corresponds to a move above 50. And then you have these two big drops here and again here, which corresponds to this move below 50. So what we are seeing here is, irrespective of the chart, irrespective of the time period, moving below or above 50 always corresponds to a big swing in price. As you understand this, the more you're going to be understanding why markets behave the way they do. So this is just an example, and we're going to continue with these lessons. This is Eric Muada with Muada.com. Good luck, peace, and blessings. I am out, but I shall be back.